Assalamu alaikum wa rahmatullahi wa barakatuh. Can I have this one? Uh, the topic of my talk will be, first of all, actually, I want to thank the organizers for organizing this excellent event and inviting us to present uh, our papers here. And I really want to thank them for the warm hospitality they've shown us. My talk is on the role of digital economy and realization of inclusive growth. And there are three things which I want to cover in the short time I have. To look at very briefly on the trends of inclusive growth in the past and what we can expect in the future, looking at the digital economy and the implications in terms of inclusive growth, and finally try to lay out some policies which can drive the digital economy towards inclusive growth. I'll start with showing you some figures in terms of the pattern of growth and how it was distributed among different segments of the population. During the last 35 years or so, the bottom 50% of the population actually benefited from 12% of the growth that was created during these 35 years. And the top 1% took 27%, which is double the amount of what the bottom 50% got. So starting with a base where the wealth and income were not equally distributed, this kind of development basically makes the concentration of wealth and income more acute. This is another figure which shows for a year the distribution of income of the top 10% of the income shareholders. And this shows in terms of the different regions and countries. We see in general that the developed economies, they have relatively more equitable distribution than the developing economies. And we see that in some ways, the Middle East in some ways has the worst in income distribution when it comes to the share of 10%, the income going to the top 10% of the income holders. Now, given this background of very non-inclusive development, what does the digital economy have to offer us? We are in the midst of fourth industrial revolution, which basically integrates the physical and the digital or the virtual world. And what is happening is the production processes and the economies, they are changing. We are moving from the traditional capitalism to what we call the informational capitalism. And what this is doing is that instead of using physical capital and labor, the new economies will be using more intellectual capital and information as the key input in productions. The production processes are changing, and just to give a very simple perspective, in terms of the enterprises using inputs from suppliers and selling outputs to the customers and having different processes like inbound logistics, outward logistics, operations and processes on the one hand, uses of different types of resources, and marketing and sales, all these items which are shown in the green shade, they will be affected by the digital economy. The key thing is the whole production process and the pattern of operations will change. So the implications of this new digital economy, of course, there are positive aspects to it. And what we see is that the digital economy can break down some of these barriers which the physical economy provides, not only in terms of the physical, but also the spatial and the temporal boundaries will be changing under this new digital regime. There was a report by Deloitte sometime back, 2014, and they said that just providing internet access to the developing world could actually increase the productivity of these economies by 25% and increase the GDPs by 2.2 trillion US dollars per annum. And not only that, the income can increase by $600 per person per year in these economies and lift 160 million people out of extreme poverty. So the potentials of the digital economy in terms of contributing to development and growth is great. But of course, like anything else, it is a double-edged sword. And while there's promise of growth and development, there's also a threat in terms of whether this growth and development will be balanced and whether the poorer sections of the population will benefit from this growth. And the two key issues which I think are important in this respect, first is the digital exclusion. Just like economic and social exclusion, the new exclusion in the digital world will be the digital exclusion, where a segment of the population will not be able to use this new digital framework to benefit themselves. And of course, the other thing is the digital unemployment, which has been discussed earlier in the session, that the labor and human capital will be replaced by machines. Now, of course, what will happen is some of the jobs will go, but new jobs will be created. And the issue is whether the economies are ready to fill these new jobs. Now, if we leave this development process to the market forces, I think what we have seen in the past in terms of income inequalities becoming worse, this will continue. So there is a need for some policies which can drive the new digital economy in a way which benefits all segments of the population. I have here five actually key things which we can look at in terms of how the digital economy can be more inclusive. And the first element, of course, is to build a robust digital infrastructure and ecosystem so that the digital services are available to all segments of the population. The first thing, of course, is widespread internet connectivity and mobile ownership so that individuals can have access to the digital ecosystem. The other thing, very important thing, is the regulatory framework, and this is mainly required for protecting the consumers. I think consumer protection will become a very important issue as we move forward. And the third thing I just want to mention about the digital payment systems. I mean, there's been discussion in terms of cryptocurrency and digital currencies, but all of this cannot work unless there is a national level or actually even international level digital payment system which controls transfer of funds and money. The second aspect of the digital economy to be inclusive is, of course, to close the digital divide. And actually, just like economic and social justice is a policy-related issue, social justice can also be applied to the digital divide. So when we talk about social justice, of course, the government has to play an important role here. And the key thing here is to invest in human capital so that the population of countries, they are ready to in some ways accept this new economy. It relates to not only the type of education, but also in terms of using the digital technology in terms of e-learning and digital learning to actually empower people with these new skills in the digital economy. The third aspect, of course, is expanding the sharing economy. And sharing economy has two parts. One part is, of course, to use the unutilized assets which a lot of people have and to make them into productive assets. So through the digital technology, the assets can be actually become productive, and good examples of these are, of course, Uber and Airbnb, for example, where people who have assets which are not utilized becoming very productive and basically becoming income generating assets. The other aspect is that instead of at the firm level or the businesses, instead of buying these real assets, they can just start to buy the services of assets. So you don't have to buy, for example, machines, but buy the services of the machines. And this would help reduce the costs and increase the productivity of the businesses. The fourth aspect is about inclusive growth. Usually when we talk about entrepreneurship, we're talking about economic value. But when you talk about SDGs, social and inclusive growth, we also have to think in terms of social values. So we're talking about new entrepreneurs which create not only economic value, but also social value. And these new entrepreneurs will use digital technology to optimize their production processes, transform this supply chains, and reduce costs and reach markets which the physical firms cannot serve. And the final part of this is fintech. Fintechs basically in the inclusive world, what we see is that economic exclusion is partly because of financial exclusion. And what fintechs do, they actually break down the barriers in terms of reaching the poor. One of the reasons the traditional financial institutions cannot reach the poorer sections of the population is because from an economics point of view, they are not sustainable. Now, fintechs provides the opportunities to actually enrich this segment of the population. And there was a report by McKinsey in 2016. They found that there are 200 million micro and small enterprises which are not served, and there's a credit gap of $2.2 trillion globally. And using the fintech, if financing is provided to these enterprises, the GDP or the output can increase to by $3.7 trillion globally. And fintechs can also actually reduce the costs of providing financial services up to 80 to 90%.
I have Doctor, two more minutes.
I have a last slide on Islamic economics and Islamic perspectives to digital economy. I'll not talk much about it because I think there's a whole session by Dr. Aznan who's going to talk about it. But the key thing is the following, that when we talk about Islamic economics and the capitalist system, one of the key things we argue in Islamic economics that it focuses on distributive and cumulative justice. And we have seen that the patterns of development in the capitalist system has been very uneven. It creates a lot of inequalities. And part of this probably is because of the interest-based financial system they use. The question for Islamic economists and the Islamic Financial Center is, what can Islamic finance offer to as an alternative, especially in the digital era, to provide a more balanced and equitable growth? Thank you very much.